Question number 1. In using regression analysis, which measure indicates the extent to which a change in the independent variable x explains a change in the dependent variable y? I'm sure you would know. This is the equation I'm talking about. Y is equal to a plus bx. Here x is the independent variable, y is the dependent variable, right? So, which measure indicates the extent to which a change in x explains a change in y? P-value? No, because p-value is used in statistics, in testing of hypothesis, in standard normal distribution. So this is totally way off. You will never be tested on something like this, at least in BEC. R squared is basically the square of the coefficient of correlation. R is the coefficient of correlation. If it is squared, this is called coefficient of determination. What it measures for you? It measures the proportion of the total variance in the dependent variable that can be explained by the independent variable. And that's what we are looking for. R squared is the answer. This is the right option. Why not C, the standard error? Standard error simply is a measure of the standard deviation or the variability of a sampling distribution. This is clearly not what we're looking for. T statistic, it is again one of the measures we use in testing of hypothesis. So this is not something you are going to be tested on. B is the right option. Thomson Company is in the process of preparing its budget for the next fiscal year. The company has had problems controlling costs in prior years and has decided to adopt a flexible budgeting system this year. Many of its costs contains both fixed and variable cost components. A method that can be used to separate cost into fixed and variable components is trend analysis. No. Trend analysis is a tool we use to estimate the cost, project the cost or expenses out into the future. What's going to be the cost and the expense or the revenue in the future. So this is not right. Monte Carlo simulation. This is again incorrect because we use Monte Carlo simulation to generate lots of values for a random variable. Like if we have your direct material, it can have a certain cost, $3 or $3.5 or any number. So we use Monte Carlo simulation to generate individual values for a random variable, direct material, the cost of our production, one of the components of cost of production. Then we have dynamic programming. This is again incorrect. Why? Because dynamic programming is used to make a series of interrelated decisions. Here we are just talking about just separating fixed cost and variable cost from a mixed cost. Then it has to be regression analysis. Yes, that is true. That is true. We use regression analysis to construct an equation I just discussed a little while ago. Now this part here, B, represents the variable component multiplied by X, and A is the fixed component. So we use regression analysis to split the fixed and variable cost by means of least square. So that's the right option. Arbor Corporation uses the coefficient of correlation to measure the strength of cost-volume relationships used in planning. When reviewing variable costs and volume, Arbor would be most likely to find a coefficient of correlation equal to what you need to know. Cost and volume, they have direct relationship. When the volume of production goes up, the cost goes up in proportion, right? So then we should look for a number that represents a strong or perfectly positive correlation, and that's going to be +1. D is the right option. 0 would mean no correlation between these two, but there is a strong positive correlation. Negative means a perfectly negatively correlation, and then of course that's not the case, and not A as well. D is the right option. Probability analysis or the risk analysis is used only for situations involving 5 or fewer possible outcomes. Wrong. Probability analysis is not just limited to 5 or fewer possible analysis. You could extend it beyond that. Wrong. Probability analysis is used only for situations in which the summation of probabilities weights is greater than 1. This is wrong. The sum of probabilities must always be equal to 1. Incorrect. C. Probability analysis is an extension of sensitivity analysis. That is absolutely right. Probability analysis is an extension of sensitivity analysis. Why? Because sensitivity analysis uses a trial and error method in which the sensitivity of the solution to changes in variable is calculated, and that is what the probability analysis is all about. So they are the same, or one is the extension of the other. D. Incompatible with sensitivity analysis is wrong. Probability analysis is very much compatible with the sensitivity analysis, so we got our right option, C. Regression analysis estimates the independent cost variable. No, we use independent variable to estimate the dependent variable. This is wrong. And moreover, an independent variable is assumed in regression analysis and is based on the activity rather than cost. So this is wrong on this account as well. B. Uses probability assumptions to determine the total project cost. This is wrong as well, because no probabilities are used in the regression analysis. I'm sure you would know, where did we use probabilities when we drew up this linear equation? This is wrong as well. What about C? Estimates the dependent cost variable. Yes, that's what we use. If X is your number of units, B is your variable cost per unit, A is the fixed cost, then by just changing the number of units, we can estimate the total cost. So this is the independent variable, this is the dependent variable, and this is the right option. Then it says it ignores the coefficient of determination. This is again wrong, because coefficient of determination is used to evaluate the result of regression analysis that determines how good fit exists between the independent variable and the dependent variable. So this option is wrong as well. It doesn't ignore coefficient of determination. Rather, we use coefficient of determination to assess the regression equation, how good it is. Then the coefficient of determination R squared in a multiple regression equation is what? That's what we were just talking about. A. Percentage of variation in the independent variable explained by the variation in the dependent variable. This is totally opposite what it should be. If you just reverse dependent to independent, percentage of variation in the dependent variable explained by the variation in the independent variable. Now this will make the statement correct. So right now this is not correct in its current form. Percentage of variation in the dependent variable explained by the variation in the independent variable. See, these are the changes we made above, so this is the right option. Measures the proximity of the actual data to be estimated data points. No, this is not what coefficient of determination is. Coefficient of independent variable divided by the standard error of regression coefficient. No, this is not what R square or the coefficient of determination is. We got our answer, it's B. Next, using the analysis, Fairfield company graphed the following relationship of its cheapest product line sales with its customers' income level. If there is a strong statistical relationship between the sales and the customer's income level, which of the following numbers best represents the correlation coefficient for this relationship? We can see it's a negatively sloping line, so you should expect a value between 0 and -1, or maybe -1 itself. So the one, it is impossible, not plus, so that's surely negative 0.93. That's the right option. This is the coefficient of correlation between these two variables, sales and income levels increasing. Next, our regression equation estimates the dependent variable. Absolutely right, using the changes in the independent variable. This is correct. It is based on objective and constraint function. This is wrong, because this is pointing us toward linear programming. Linear programming involves objective and constraint function. Wrong. C. Estimates the independent variable. No, estimates the dependent variable. Wrong. It ignores the coefficient of determination. As I said earlier, coefficient of determination is a statistical measure which we use to evaluate the results of regression analysis. If the coefficient of determination is closer to 1, then the results are very much reliable, very much dependable. Next. There are a variety of ways of classifying costs of an object as either fixed or variable. The most accurate method is considered to be the most accurate method. First, the engineering method. Well, this is totally a ridiculous option here. Engineering method we use to study the time for production, the motion studies, how things move in the production floor. So it only can be used where there is an observable relationship between inputs and outputs. So this is totally a misfit option here. The account analysis, again, this is not the right option. Account analysis is just a review of all the accounts by someone knowledgeable of the activities for the firm. So this is not the tool we use to split between variable and fixed cost. High-low method, yes, this is a method. This is a method we use to separate the fixed and variable cost, but this is not a very accurate method. The reason, in high-low method, we only take the highest and the lowest point. We ignore all the other pairs of data. That means we are relying only on these two numbers, highest and the lowest. So this method basically is a very simplified approach, but not an accurate one. Then what is the right approach? The regression analysis model. The regression analysis method. This is the most accurate method amongst these given here. Multiple regression differs from the simple regression in that this is the formula we use, or the form of the multiple regression. Y is equal to A plus B1x1 plus B2x2 plus so on Bnxn. So here this x1, x2, x3 and so on xn, they are your independent variables. So that's the difference. In simple regression equation, there is just one independent variable, y is equal to a plus bx, this one only. But in multiple regression, see, you have multiple independent, more than one independent variables, and that's why D is the right option. Seacraft Incorporated received a request for a competitive bid for the sale of one of its unique boating products with a desired modification. Seacraft is now in the process of manufacturing this product, but with a slightly different modification for another customer. These unique products are labor intensive and both will have long production runs. Which of the following methods should Seacraft use to estimate the cost of the new competitive bid? Not expected value analysis, not regression analysis, there is no independent or dependent variable. This involves learning curve analysis. Learning curve analysis will be used to determine the increase in efficiency as the workers gain experience in a production run. B is the right option. Then what is continuous probability simulation? In continuous probability simulation, we study a problem by creating a model of the process, and then through a repetitive process, through trial and error solution, we try to attempt to improve the problem solution. So this is clearly not what we are looking for. In regression analysis, the coefficient of determination measures the economic plausibility. Economic plausibility means reasonableness, probable. No, in regression analysis, we estimate the dependent variable with the help of independent variable. Right? So, this is not true. Goodness of fit, yes. That is correct. Greater the value of r square, closer to 100%. The greater is the better is the fit between x and y, between the independent and dependent variable. This is the correct option. Given the demand exceeds capacity, there is more demand, less capacity, and that there is no spoilage or waste, and that there is full utilization of a constant number of assembly hours, the number of components needed for an assembly operation with an 80% learning curve should increase for successive periods, decrease per unit of output. Well, this is incorrect. Not decrease per unit of output, because if there are 5 components to be added in an item, every time you produce you need 5 components, so it's not going to decrease with the passage of time. What is going to increase is the number of components required by workers, because when the workers become more expert, they will take more inputs of these components to make the output. So that is going to increase. Increase for successive periods. Let's read the statement again. Given that demand exceeds capacity and that there is no spoilage or waste and that there is full utilization of the constant number of assembly hours, the number of components needed for an assembly operation with 80% learning curve, when the workers gain experience, they will demand more raw material for production. That's what you call learning curve. So that's going to be just one only, and that makes A to be the correct option. The regression analysis results for ABC company is shown by this equation. Y is equal to 90x plus 45. The standard error is 30. What is standard error? Standard error measures the accuracy with which a sample drawn from the population represents a population. How well a sample represents a population, how accurately, is what you call the standard error. And it has nothing to do in this question. And coefficient of determination R squared is 0.81. The budget calls for production of 100 units. What is the estimate of total cost? It's a fairly straightforward question. What you need to do, just plug in 100 for X. You will get Y is equal to 9 into 100 plus 45, and its simplification will give you 90, 45, and that's D. Day Mail Order Company applied the high-low method of cost estimation to customer order data for the first 4 months of year 1. What was the variable order filling cost component per order? Variable order filling cost component per order. In other words, you need to find B. B is equal to the highest cost minus the lowest cost upon the highest activity minus the lowest activity. Now we need to determine where do we have these numbers. This is the highest activity and this is the cost at highest activity. So they will be put right here. This is the highest cost, highest activity, and what would be the lowest one? This one. Just plug in these numbers. 4320 less 3120 upon 1800 minus 1200. If you simplify, it will give you $2, and that makes perfect match with your option A. Oh, this is a long question, much bigger. See, whenever you come across a question like this, it is always recommended to read what exactly is required. The projected gross profit for the month ending December 31st, year 1. You need gross profit. Okay, now we know what we need to find out from this information. Let us see what is given. A computer storage and backup company, SuperDrive, uses accrual accounting. The company's statement of financial position for the year ended November 30th, year 1 is shown below. We have been given the assets, cash, account receivables, inventory, property, plant and equipment, irrelevant. We just need gross profit. Liabilities, accounts payable, common stock, retained earnings, and this is the balance sheet total. Now what we're looking for, gross profit, and for this we need to find some information related to sales. Sales are budgeted to be 520 for December, and that's exactly what we need. And 500,000 for January. Collections, we are not interested in collections. 80% of the disk drives are purchased. We are not interested in purchase. Payment for the components is made in the month following the purchase. We are not interested in the payment. It says cost of goods sold is 80% of sales. If cost of goods sold is 80% of sales, that means the remaining 20% would be gross profit. So simply take 20% of 520 and that's all. That's all. $520,000 times 20% gives you 104 as your correct option. That's all. Trijonis company estimated its material handling cost at 2 activity levels. 80,000 kilos handled, this is the handling cost, and when 60,000 kilos were handled, this was the handling cost. What is Trijonis estimated cost for handling 75,000 kilos of your raw material? First thing you should do is to use high-low method to determine B. Highest cost 160, lowest cost 132. Highest activity is 80 and the lowest activity is 60. If you simplify, you get $1.4 per kilo handled. Right now, the equation you have is y is equal to A plus 1.4 x. X represents the kilos handled. I need to establish A. What is going to be A? Now, it's your choice. If you use the first pair and you replace y with 160, A is to be determined 1.4 and x with 80,000. And if you simplify, you'll get A as 48,000. That's the constant coefficient. Now, let's say if you say, no, I want to go with this pair, then what you will do, take y as $132,000 in order to determine A plus 1.4 multiplied by the kilos handled. If you simplify, you will again get A 48,000. Now we are sure that our regression equation is y is equal to $48,000 plus $1.4 per kg handled. If you want to handle 75,000 kgs, simply replace x with 75,000. 1.4 multiplied by 75,000 plus 48,000. Now just a simple arithmetic, it will give you $153,000. So the cost of handling of 75,000 kilos of material is 153,000 B. A company has determined that its sales to residential home builders tend to vary with the changes in the prime interest rate. The prime interest rate is a rate offered by the banker to its most trusted customers, borrowers. Sales this year will be $5 million. The following information is available. Prime rate could increase by 2%, which is 15% probable. In that case, our sales growth will be 20%. In fact, sales decrease will be 20%. If the prime rate increases by 1%, which is 40% probable, in that case, our sales growth is 3%. If the prime rate is unchanged, which is 35% probable, in that case, our sales growth will be 5%. And if the prime rate falls, then our sales growth will be 8%, because lower the rate at which you get the funding from the bank, the good for you, for your business. What amount is expected value of the company's sales for the coming year's budget? So what you're going to do, take 15% of -20 plus 40% of 3 plus 35% of 5 plus 10% of 8 and add all these results up. You will get 0.75. 0.75%. So 0.75% multiplied by the sales amount will give you 0.75 times 5 million. It will give you an estimated increase of $37,500, right? So if the 5 million sale is expected for the year, which if the interest rate change with the expected probability of 0.75, the sale might go up because the result is plus 37,500. So the sale we can expect is 5 million plus 37,500 will give you 5.0375 million. That makes A to be the correct option. It is estimated that a particular manufacturing job is subject to 80% learning curve. The first unit required 50 labor hours. I told you, you need to draw 3 columns: units, total time, average time. Sometimes you may have a total cost or the average cost, labor cost. This will help you find any intermediate number that you may need to find in the exam. So when you produce first unit, it took 50 labor hours. Average is 50 by 1. When you double the output, your total time should double to 100. But since we are on 80% learning curve, the total time will be 80% of 100. That's $80, 80 labor hours. When the output is doubled from 2 to 4, your time should be 80 is double 160. But it will not be 160, rather it will be 80% of 160, that is 128. So 80 by 2 average is 40, 128 by 4 average is 32. You can calculate these average time figures directly by taking 80% of 50, 40. And then 80% of 40, 32. This is a very helpful table. That's what we use in CMA. And remember, on your CPA exams, the output given will always be in this form: double, 1 to 2, 2 to 4, 4 to 8, 10 to 20, 20 to 40, 40 to 80. Every question will involve the doubling of output. So what was required? What is the cumulative average time? This is the column we are interested in. This is the cumulative average time. When the first unit is produced, the average is 50. When 2 units are produced, the cumulative average is 40. When the 4 units are produced, the average is 32, and that makes C to be the correct option. You may be asked to calculate the time required to complete the second unit. Now, what you will do here, this column will help you. If you produce 2 units, what is the time required to complete the second unit? You will say 80 hours is the time to produce unit 1 and 2, out of which 50 hours were taken by the first unit. That means 80 less 50. 30 hours is the time taken by the second unit. So see, sometimes this table can be very helpful for you in order to find some intermediate numbers that might be required. Sender Incorporated estimates parcel mailing cost using data shown in the chart below. What is the sender's estimated cost for mailing 20,000 parcels? Now, what we see from this figure here, your fixed cost is $15,000, but we are not sure what about the variable components. We can find it out. If you just see, between 0 to 20,000 parcels, the cost changes by $60,000. And the number of parcels from 0 to 20. So if you want to find the cost per parcel, once this $50,000 fixed cost is paid off, it is going to be $60,000 is the cost for 20,000 parcels. So that will give you $3. $3 is the variable cost per parcel and $15,000 is the fixed cost. If you draw it in the form of an equation, so it'll be total cost is equal to $15,000 you which must pay as a fixed cost plus $3 multiplied by the number of parcels sent. If you want to send 12,000 parcels, then the variable cost will be $36,000. To this you add 15,000 and that will give you a total of 51. C. Information about returns of 8 stocks is as follows. E is perfectly correlated with F. F is perfectly correlated with E. Perfectly correlated. Is it negative or positive? Not given, so we can't say anything about E and F. We have to be given whether it is perfectly negatively correlated or perfectly positively correlated. What about H? Positively correlated with I. H is positively correlated with I. I is positively correlated with H. J and K, they are not correlated. K and J are not correlated. L perfectly negatively correlated with M. And M perfectly negatively correlated with L. The question says which pair of stock, if the stocks are purchased in equal amounts, will create the portfolio with the least risk. Remember, the portfolio theory suggests that if you have 2 stocks whose returns are perfectly negatively correlated, means if you plot R, correlation of coefficient between 2 stocks A and B, and if R happens to be -1, so combining these 2 stocks will eliminate your risk of volatility. So if 2 stocks are perfectly negatively correlated, you should combine these 2 stocks to reduce your portfolio risk. So in our example, L and M, L with M and M will have perfect negative correlation. So the perfect option is going to be combining L with M. These are the right option. Roger Company implemented activity-based costing in the current year to select the appropriate driver for cost pool A. Roger performed regression analysis for 2 independent variables, driver 1 and driver 2, using monthly operating data. The monthly levels of cost pool A, for which he has identified 2 drivers, were the dependent variables in both regressions. Output results from the regression analysis were as follows. Driver 1 has R squared 0.46, driver 2 has R squared 0.80. Intercept, that is the component A, y is equal to A plus Bx. So we have 2 drivers, driver 1, driver 2. If you construct the equation, so in this case y is going to be 551 plus 0.55x. In case of driver 2, it's going to be y is going to be 970 plus 0.33x. X being the driver 1 and driver 2 in these cases. If you remember, we discussed previously that the coefficient of determination R squared is what we use to determine which independent variable is appropriate. So in this case, driver 2 is preferable because it has a higher R squared. We are going to reject driver 1. At the budgeted production level for the next month, the level of driver 1 and driver 2 are expected to be 5880 and 7000 for driver 2. Based on this information, what is the budgeted amount for cost pool A for the next month? Budgeted amount is going to be used for driver 2 because this is the one with higher R squared. So Y is equal to 970 plus 0.33 multiplied by 7,000. If you simplify, it will give you 3280. 3280, that makes B to be the correct option. Okay, now this is a good question. Smith Legal Services has offered to represent a plaintiff in a lawsuit for a retainer of $20,000 plus 40% of any award over $20,000. Smith expects to incur out-of-pocket expenditures of $15,000 in litigating the suit. Possible court awards with their associated probabilities are as follows. Award could be $100,000, which is 70% probable, and it could be $0, which is 30% probable. In that case, what do you expect to receive? Right? Let's see. Either the award is 0 or it is $100,000. If it is 0, Smith Legal Services will receive just $20,000 and will not be able to receive any 40% of the award because there is no award. But if the award is $100,000, in that case, Smith will receive $20,000 of retainer fee, the guaranteed amount, plus 40% of any award above $20,000. If the award is $100,000, how much it is above $20,000? 100 less 20, $80,000. So we will get 40% of $80,000. Why? Because 40% of any award above 20,000. So it's going to be 20,000 in this case and $52,000 in this case. Don't forget, Smith expects to incur out-of-pocket expenditure of $15,000. So if this is the case, less $15,000 means you get a net payoff of $5,000. And in this case, if you deduct $15,000, you get a total of $37,000. Right? Now, the probability of no award is 30%. And probability of 100,000 award is 70%. So this 5,000 amount is 30% probable, and this $37,000 amount, it is 70% probable. So if you take 30% of 5,000 plus 70% 37,000, what you get is 27,400, and that perfectly matches with your option B.